Good morning, Fractal Effects team. Before we get started, make sure you read the disclosure on our website, fractaleffects.com. We're just in a morning setup right now. If you're following along with us, make sure it's in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we've had a double break to the downside. We have a downside expansion model and a sell model. We hit the blue zone originally, and then that's when we broke to the downside here. US 500 on the right. Now it's on the left. We have a daily fair value gap down here. We're sitting in a 4-hour. Just want to mark out 7 o'clock or 10 o'clock, I should say, sorry. So when we get a double break, what we want to see is a retracement back to one of our key zones. So we're right at the NYC fair value gap here, close to the blue. We've wicked the 50. Now I want to see a 5M bearish fair value gap, and that'll give me enough confluence to feel comfortable saying that this thing wants to push down. Now where it wants to push down to is obviously, it's not that much room. Could go deeper, obviously, but our target would just be, there's a 15M fair value gap here and a daily fair value gap. So the consequence encroachment of both those would be right somewhere in the middle here, that second dotted line. This is a CFD contract, that's 19,614, so obviously it might go down to at least 600. That's the setup. I now just want to see a 5M bearish fair value gap being created and tapped, and then a 1M fair value gap created and tapped. Jump back up to the 5M. We are now well above the NYC fair value gap. But that's pretty much the play. We want to see the first bearish 5M fair value gap being tapped, and then on a smaller time frame, a 1M fair value gap being tapped. Today is Tuesday. Tuesday sets the low of the week. We have technically taken out previous day's low, but at the same time, we just tapped this daily fair value gap, which is barely a tap right here, a wick. I like to see at least one candle close down here in order for this to really seal the deal that it wants to move up going into tomorrow. And then obviously we have FOMC tomorrow. So right at the blue zone. Now we just tapped the DSD. And we swept out these highs. This is a really good area for it to go short from. So right at the DSD low, our manipulation range high is right here. The only thing going against our confluence right now is this wick right here. Sorry, here. Which didn't happen over here, which is a good sign. You never want 10 a.m. You never want 10 a.m. to set the high or the low. Otherwise, that could just end up in a reversal. You want 10 a.m. to be a continuation candle on the 4-hour. The fact that NAS swept out the daily highs with this candle, but again, when I say sweep, I don't really consider this a sweep. Where is it? Down here. Look at that. That green line was the daily low. We just skipped over it. That's not a sweep in my book. And then that same line, the same daily lows on US 500 was right down here. So even on days where you have that divergence where one pair needs to take that liquidity because it's weaker, This is not my idea of taking that liquidity. Just barely tapping it is not my idea. Now we are on the other side. We're hitting the 4-hour fair value gap. Let me get rid of this 15M in here. So we're hitting that 4-hour fair value gap with 1 minute 20 seconds left to go. And we have taken the other side of the manipulation move. Now the only time my bias would change is if we have a double break to the other side. So now we closed above the DSD. Let's zoom in here just to see where that, a lot of boxes painted here, but there's our manipulation range high. We just wicked it. We're back at that 4-hour fair value gap. So now we're waiting for one of two things. As mentioned before, I either want to see a double break to the upside, or I want to see a 5M fair value gap, a bearish fair value gap being created, tapped, and then the same thing on a smaller time frame. Those are the only two things. Until then, you can pretty much just be patient. The second we got that double break, we could not have taken this buy. Nothing about this says buy today. We have a downside expansion model. We have a sell model. We're red across, we were at least at the time, red across the board. And we have a double break to the downside. And as mentioned before, the only thing that is going against our confluence right now is this 10 o'clock wick. But as mentioned before, I don't consider that to be a sweep. I don't consider that to be a sweep. I don't really consider that to be a tap on the daily fair value gap. It's a small, small wick. That's why my confluence is still to the downside. I think they just wanted to tap this 4-hour fair value gap. We're still sitting there in that same 4-hour fair value gap in the DSD on US 500. I think it wants to start pushing down from here. So we just got the, hold on, what are we on here, 5M? We just got the bullish confirmation on both these pairs. So we can't now take a low. Take a sell. We are no longer looking for a sell that invalidates any sell setups because there's an 85% chance that this thing will not break the bottom of that range. And at the same time, look at how many negative points of confluence are against the buy. We have a downside expansion model, a sell model. We have this divergence where NAS set the low at 10 o'clock, meaning that that could reverse. We also haven't hit any of these fair value gaps. US 500 never set the low at 10 o'clock. So this is one of those days where it's ridiculously muddy, not to mention it's the Tuesday before an FOMC. So either if you are going to proceed with a really reduced lot size, or again, you can consider this an invalid day. There's two things that make me walk away from a chart and just decide it's an invalid day. One, as mentioned before, if 10 o'clock, 10 a.m. Eastern Standard Time, New York time, we set the high or the low. If we set the high or the low at that time, and we've just swept liquidity and hit a fair value gap, that means that entire market could reverse, regardless of your models. You could have a downside expansion model, sell model. All the confluence could be telling you that, hey, this thing is going down, down, down. A double break even. But the second you get 10 o'clock, setting that low, everything could just decide to push up from there. We want 10 o'clock to be a continuation candle on the 4-hour. This is why sticking to your rules is so important. So even though my bias was completely bearish and I wanted to sell this market today, I now can't because we have a bullish confirmation on both of these. And yet I don't consider that a sweep, and I think this thing is going to crash and we're going to get an invalid day. But regardless, that's what rules are there for. You don't want there to be more confluence against you. So I'm personally going to set this one out. I'm not interested in buying this market today. And I'm not interested in selling it. I've been completely invalidated. Two signs of invalidation. Both of them pointing to a bullish run, by the way, but still. An invalidation is an invalidation. 10 o'clock setting the high instead of being a continuation candle on the 4-hour. That's an invalidation for me. Getting a bullish confirmation when everything is looking bearish. We have a double break to the downside, and we didn't really sweep and tap. This is not what I consider a sweep or a tap. Another point of invalidation. We just got a double break on US 500. Swept the low, break the high. Since there is no high impact news today, the market most likely will be drawing back down to the, or up to the new day opening gap. There's the true day open as well, that blue line. The indicator paints out both of these points for you, and there's a purple zone here. Continuing to drive up. There's another 15M fair value gap that it just tapped. Get rid of this now. It's also London's fair value gap, which was left open. It was never tapped. And we're at 61% of the bigger range right now. But there's too many invalidations here for me. We're going to watch this market for the next 10 minutes and see what happens, but we might just conclude this session early. We might go over some of the Bitcoin stuff from the weekend. No double break here. So again, a lot of divergence happening. The low being set here at 10, the double break to the upside here. If we didn't get that double break here, and we didn't get these bullish confirmations, or at least just one of them, like one of the assets diverged and didn't give us that bullish confirmation, I would have still been interested in looking for a sell setup. But as mentioned before, you want these trade setups to be easy. This has to look easy, has to look obvious. This is not obvious today. Even for a sell setup, this is one hell of a deep retracement. I'm going to jump over to oil for a second here. We did get a confirmation on oil. Let's see if that's a cleaner setup. Upside expansion model, buy model. We broke to the upside of the manipulation range. The low, I believe, is sitting right there. We have a double break. Yeah, we had a double break and a bullish confirmation. Let me see what's happening on the 4-hour though. 4-hour highs are right there, but there is a 4-hour fair value gap. Another one of those instances though where 10 o'clock set the high. Meaning we're technically in reversal territory. We're inside of a 4-hour fair value gap. There's our NYC open. So if the market breaks here, that's an invalid day as well. And I'm not surprised. Obviously, before FOMC, you're going to see a lot of this kind of price action. They want to muddy the waters. So oil is bearish. There's Monday, Tuesday, so it makes sense for Tuesday to set the high and take out those 4-hour and tap this. Daily fair value gap there. So after the double break, we've retraced back to the NYC fair value gap, the 20 EMA. Let's see if we get a bullish 5M fair value gap. But again, not too much room here. There's your 4-hour high, and you're sitting inside of a daily fair value gap, with 10 o'clock being your high right now. Where's the new day opening gap? Right down here. This is one of those other trade setups that, again, I'm not all that comfortable. I don't want to punch through. First of all, there's not that much room. I think we'll at least take out these highs. But depending on where you get in, let's say this really was the reversal point. I mean, we'd have to get in down here. Yeah, that's pushing it. One minute, 10 seconds left for this candle to close. Let's see if we get a 5M a bullish fair value gap setup. So there is another 4-hour fair value gap up here. Could technically make its way here. Still no room for growth. Not saying it can't punch past this, it's just on a Tuesday of an FOMC week, you got to proceed with caution, aim for low-hanging fruit. Right now it's still having a tough time just getting over this 4-hour fair value gap. 15 seconds left, let's see where we close. We're 1 minute away from 11. US 500 doing a whole bunch of nothing right now. It's consolidating. Usually a consolidation leads to a continuation after a manipulation. So you got a power of 3 setup happening here now. So if this thing wants to move up, ideally we want to see it manipulate to the downside first, tap this 20 EMA, and then push up. See, even after this reversal, there was none of these fair value gaps have been tapped. Not even this one. This was the last 5M fair value gap created, and even it has not been tapped. So again, if this market wants to move up, I want to see it at least manipulate down out of this consolidation. Into this fair value gap first. That's a true manipulation. Right now, all it's doing, if it closes up here, this is manipulating up. Remember, a power of 3, or sorry, after a consolidation, you don't always have to manipulate, but another point of confluence. The only time we want to take those trades is when it does manipulate and it does sweep out liquidity. Because nothing about this market is inviting right now. As mentioned before, none of the 5M fair value gaps have been tapped. Even your consolidation, let's see if it gives it to us, but this consolidation move just kind of pushes up without giving us a true manipulation into a fair value gap. It doesn't really count. It doesn't make us excited or interested. That's us chasing down the market. Here's the 20 EMA. Here's the first presented fair value gap. There's your consolidation. That would be the manipulation and the extension into NDOG. And again, go in with a reduced lot size. This is not something that I'd be interested in. You should be following along in a demo account. Let's take a quick peek and see what NAS is doing. NAS still hasn't given us our double break. It's up there. Same thing with NAS. There's your first presented fair value gap. Here's your consolidation. And we just closed above. Yeah, nothing about this is interesting at all right now. Funny thing is all the signs are still pushing to a more of a down move than anything. I'd rather go back to oil. Oil looks like it might be giving us something here. Nope, just took away that 5M fair value gap. So no 5M fair value gap created here in oil. But we are getting rejection off the NYC fair value gap. But still, when you're in this kind of a setup, I need a foothold on the 5M at least. Because we didn't even have a secondary rebalancing candle. This candle had engulfed this one. At least we could have said that that was an immediate rebalance, and we could have looked for a 1M. But I want to see a 5M fair value gap. Otherwise, I'm not interested in this market. Let's look at US 500 on the 4-hour real quick. Now, on the 4-hour, we have $6 a.m. setting the low after tapping this. And then we had a run up. No real retracement yet. Just using this to find the midpoint consequence encroachment of the 6 a.m. candle. So we're well above that. Now let's go to the 1-hour. Here's 6 a.m. 7 pushed away from it. Yeah, at the very least, it's got to touch this fair value gap. Otherwise, there's nothing here. Oil starting to create a 5M fair value gap. Let's see if this sticks. Two minutes, 27 seconds, or 35 seconds, sorry. A whole bunch of nothing still from US 500, and I'm sure NAS as well. I'm personally not interested in this oil trade because there's no room for growth, but I'm going to mark it up. 1 minute left. I want to see this fair value gap come, left open. I want to see it retrace back in here and create a 1M fair value gap. Really quick, I just want to see something on NAS. NAS still has not given us a double break to the upside. That's very interesting. And then there's the first presented fair value gap, 20 EMA is sitting in it. Let's go back to oil. This is just too muddy. So oil, we have an idea of where it wants to go, but not much room here. I want to see it come back to this 20 EMA, tap this fair value gap, and give us a setup here. I'm going to change this to red just so we can see it. Another thing real quick. So DSD lows there. "14 minutes left in our stream. Let's see if we get some kind of movement out of oil. Let's see if we get this candle pushing back into this area now. About 10 minutes left. Looks like we're getting this push back in here now. And then on US 500, again, there's nothing here. There's been no foothold. Usually consolidation leads to a continuation. Most likely the London highs up here. But there's nothing about this market that interests me right now. No foothold, no manipulation. Okay, now we're inside this fair value gap, heading towards the 50. Let's see if we get a 1M fair value gap and a tap. US 500 still pushing up. This is one hell of a push up from a nosedive. Since this is a previously tapped fair value gap, I expected one of two things to happen. Either the 4-hour lows to be taken, which is down here, this green line, or this fair value gap to be tapped into. So essentially both of those happening. It did none of that. It did not tap any of these. This is technically a runaway market. Consolidation leading to a continuation without a manipulation. There's London highs right there. About 7 minutes left. Let's see if US oil here gives us a 1M fair value gap and a foothold. About 4 minutes left. Still no fair value gap created here on the 1M for oil. And a bit of a runaway market here on US 500. Looks like oil wants to drive down a little bit further. I don't believe we're going to get our setup in time, so we'll conclude our session there. A lot of muddied waters today, no real footholds created. But tomorrow's FOMC. We'll be live tomorrow. We'll go over oil and maybe just do some educational recap. But